Everyone, and welcome to my channel Options Trader Today. So today in this video I will tell you how the price of gold has moved in the last 2 days and how the price of gold can move in the next 2 days. See, if you look at the chart of gold, what you can see that gold has made two patterns which I have already explained you. Okay, and a pattern from 2012 to 2020 which I have discussed in weekly as well as in this monthly videos. Okay, you can check that. Okay, because there are three patterns are forming and these are the 2 years while 8 months pattern which are similar. What it says that it has already made a resistance which is a weak resistance, so chances will be high if the price comes close to this particular level, chance of going further upside will be there and can cross a level of 2074. After that again a same pattern is created and a cup pattern is there, and which I have already explained you that if the price move over level of 1854, chances were very high it can make and close to around 2000, which it has made a high of around $2047, and then if this level also sustain we could have seen further upside. Okay, now if you look at this particular chart, there is a continuous downtrend after making a high of around $2047. Okay, and this is from 4 days continuously we have seen there is a good volatility as well as a continuous move down, because what we have seen, the Fed was continuously increasing the rate. Okay, and there is a lot of volatility we have seen, and the global economy is trying to moving it was bit shaken, as we have seen the price of gold also moving very in a volatile range. Okay, now before we move ahead and explain you where the price of gold can move in the next 2 days, if you have any doubt you can mail me at stockmarkettradinglab@gmail.com, and one more mail id in the description. Please watch the full video so you understand how this technical work, and a telegram link I have given in the description, you can join that too. Okay, now look at this particular chart. After March there is a continuous upside. Okay, it is quite volatile you can say, but whenever there is huge volatility, try to reduce your quantity to half, increase your SL as well as your target twice, so that your SL should not be hit and it should hit your target. Okay, but if you keep the same target in a range bound market, that means there is no volatility. If you keep the same in a volatile market, then your SL will also hit and your target will also hit. So SL can be the first one that can hit. Okay, so probability is always that you should follow that. Whenever there is huge volatility, try to reduce the quantity to half and increase your SL and target twice. Okay, now suppose if the price didn't sustain, chances are very high because it has already made a swing at this particular level. Suppose if this level didn't sustain, we can see it can go further down towards a level of $1960, because what we can see, the next resistance coming at around after 1968, we can see a level of 1960, and if that level also move further low, then we can see a level of $1955. Suppose if the price fall below that particular level, then we can see it can cross a level of around $1951, which is already a weak support, so chances will be very high it can move further down, and a probability of touching $1944 is there. Okay, suppose if the price fall below that particular level, it can move further low, and a probability is that it can touch a level of 1938 to a level of $1935. Okay, keep that in mind. Once the price started falling below 1960, chances of touching a level of 1949 will be there, and from there we can see a level of 1938, and if that level also move further low, then we can see a level of $1928, and then further low if the price move below that particular zone. Okay, now understand something, when the price move below a level of 1960, then chances are very high it can move further low, because there will be a huge volatility is there and a swing is already formed, and 1960 is a support, strong support. If the price fall below 1960, then yes, it will come in the zone and a probability of going further down will be there. But if the price sustain, then we can see it can move further upside, because it has already made a sharp fall because of the CPI data has come. Okay, now suppose if it form a swing at this particular level, because we have seen there is a continuous fall today, and you can say it is a sharp fall. These two candles are red candles. Probability is the C. Whenever the gold fall, it falls sharp, it rise slowly, and then some of the time it makes a good upward movement. But suppose if the price form a swing at this particular level, and if this level sustain, it can cross a level of $1973, which is already a weak resistance, and chances will be very high it can cross that particular zone and can go towards a level of $1980. And if that level move further upside, then chances of going further upside is there, and then we can see a level of 1983 to a level of around 1988 is already a weak resistance, so chances will be very high it can move further upside, and a probability that it can cross a level of $2001, and it can go further upside towards a level of around $2006. Okay, and once the price sustain above $2006, chances of going towards 2012 will be there, and then further upside, because 2012 is already a weak resistance, so chances will be high we can see it can move further upside. Okay, any doubt regarding this, you can mail me. I've given the mail IDs also in the description. Now understand something, why most of the traders lose money. Okay, why most of the traders lose money? Because they do not understand how it works. Okay, they try to make double the profit in a single day, or they take full risk of their capital what they have. They do not understand how to strategize and trades as well as invest. So I teach how to overcome all these things. Suppose if you are trading with $10,000, try to trade with 10 to 15% of capital per trade. Okay, that is 1,000 to 1,500. Take a risk of 0.5 to 1%, that is $50 to $100. Okay, now suppose if you trade 5 trades also, maximum risk you can take is $500, that is 100 per trade. If you lose 500, relax for the day and trade the next day. Now it will be beneficial for you, because once you lose 500, you will be more relaxed rather than losing 5,000, because people do lose for much of money, and in order to recover this, they lose the full capital, and then they say the market is bad. No, they do not follow proper rules. I teach how to overcome all these things. If you want to attend that workshop, mail me regarding that, and we can work out on the timing. So hope you like the video, and if you like the video, please give a thumbs up, and if you're new to my channel, please subscribe.